Elon Musk is done now. He's bought Twitter. He shows up at the headquarters carrying a sink. Let that sink in. I guess that was the message. Uh, or he's going to fire everybody, everything but the kitchen sink. That was another notion. But there he is. Hi, everyone, and welcome to the Friday, October 21st installment of the Silicon Insider, the only uncensored look at life and business in the Valley. My name is Mike Malone, and I'm here with special contributor Scott Budman, technology reporter for NBC Bay Area. Our producer is Jordan Henderson. Our East Coast correspondent is Bob Grove. And our host, as always, is the Silicon Valley Business Journal. I rushed through that because we have so much to talk about this week, Scott. This may be a banner week, a milestone week. Banner is too positive. This could be a point of inflection in Valley history this week. You just get the feeling that the tide is turning in odd ways. And we've only, we don't see this very often, maybe once every 10 years or so. But many things important happen this week. So let's get into them. First of all, let's talk about Meta, Facebook. Oh my God. Wow. Their shares plunged 24% to the lowest price since 2016. Wasn't 2016 when they weren't like profitable? They had just gone public and they weren't meeting their numbers. And I mean, this is really nasty news for Facebook.
Yeah, and it's interesting that you'd pick that as the big story of the week. Given even the Twitter.
I had a lot of choices.
Right. Right. I mean, let's focus on Meta for a minute because we knew they were spending a whole lot of money on this change, to get into the metaverse. We knew investors were skeptical, and we knew that this kind of thing, as far as our Meta shares going to collapse as investors give up, are people going to be skeptical even as the new hardware comes out and the metaverse sort of becomes its own kind of thing. We turn out all these things are happening exactly in a crescendo at the same time. People are skeptical and unimpressed with the metaverse. We find out that Zuckerberg is spending tens of billions of dollars on the metaverse. And sure enough, investors are absolutely fleeing for the hills. And this is a company that was $1 trillion company not all that long ago. And as of you and I talking right now, the stock price is below $100. The market value is $264 billion. That's a loss of more than, almost three quarters.
I mean, $2 trillion. Yes.
And that's staggering. I mean, it's what, 700 something billion dollars lost. And it's partly because, the market's been hit hard. Look at some of the other social media companies, but this one is extra special because it's really accelerating the bad news by just adding kindling to the fire and saying, this is really where the future is. We believe in this. And investors are absolutely running for the exit saying, we do not believe in this.
Yeah. And you can say, the market's was really hard on social this week, but look at little Spotify. It had a very good week. I mean, it shows the world still wants this stuff, but they don't want what Zuckerberg's offering right now. And he brought it on himself. I mean, he's had a lot of clues that this isn't going to work yet, this metaverse. He's lost his most talented employee and lieutenant, and we called him Ahab before, and I think he finally ran into his white whale. I mean, it caught up with him. I mean, in terms of personal wealth, wow, he's lost an estimated $100 billion in personal wealth this year. Well, he's down to 38 billion, but he lost 11 billion yesterday.
Yeah. Well, I mean, again, this is what happens, when you have phenomenal wealth and then a lack of confidence kicks in. But also, you had mentioned at the top of the show, is this some sort of inflection point for Silicon Valley? I don't know. It certainly is for Meta, what we knew as Facebook. And this is it goes in one of two directions, and we've seen this sort of thing before where it either, flames out big time and continues down, or this turns out to be the next big thing. and it's just sort of a delayed reaction to it. But I mean, if it is the next big thing, the reaction is certainly delayed because people have already voted with their, their wallets. And, it's interesting because Facebook's numbers and Instagram's numbers still remain high. I mean, they have serious competition with TikTok, but it's the financials now that are really struggling, largely because advertisers are going to TikTok, but also because they're just spending so much money on what is, let's be honest, an unproven next platform for them.
Right. And if it's the next big thing in 2028, will Meta still have enough cash flow to run it? I mean, it seems to me they're heading towards some sort of resolution moment where it's going to be, their value versus the arrival of this new technology that's supposed to change everything. And if they're a little late, if that arrives a little late, they're in big trouble. I mean, yeah, the numbers are great, but they've got to monetize it. I mean, eBay still has great numbers. In terms of usage, do you see it as a hot stock right now? How about AOL? AOL still got millions of users. So does Yahoo. Is the fate of Meta to become Yahoo?
Well, it's a good question. I think it's a fair question. But look, maybe the fate of, let's still call it Facebook a little bit earlier. Maybe the fate of Facebook was to become Yahoo or AOL. Zuckerberg saw this and said, okay, we have to make a drastic change because we are following that exact same trajectory in terms of users, in terms of stock price, in terms of attention we're getting, both positive and negative. We are on that AOL Yahoo trajectory. We have to do something different or else we're going to be one of those companies.
But that's why he bought Instagram. That's why he bought WhatsApp. I mean, those moves, buying the hottest new company around,
True,
and absorbing and to revitalize yourself. It's not a bad business strategy, but pursuing this thing, it's, I don't know. It may turn out to, we may have the laugh may be on us at some point down the line, but boy, he's going to cut it close. I mean, this is, and the metaverse still isn't a proven thing. I mean, look at your reaction to having put on the VR lenses. It's a lonely, weird experience, and he's essentially asking billions of people to do that same experience that you went through and learn to love it.
Right. And part of the problem is that we kind of saw this already with Second Life, and we can already do some of the cool things. The metaverse is, I thought, pretty cool when you're playing games, but I would say that also about Roblox. And you bring up Zuckerberg's really good moves to buy Instagram and WhatsApp and pay a lot of money for those. But I think especially in terms of Instagram, it's really paid itself back. I think if you're trying to get into the metaverse, he could have dipped a pretty big toe in by, say, buying Roblox, which was already very established. It had a lot of users. Yeah. That takes care of Zuckerberg's problem.
That seemed to go with his usual business philosophy.
Right.
Big war chest, find a hot company like Roblox and just go for it. Take it over. Pay a premium, knowing, though, that you can turn that around.
Well, right. And it would have given him the same sort of thing with that he got from WhatsApp, which is cachet with young people, a new way to monetize. And like you say, sort of staying with the hot thing. But instead, they decided to do it all themselves. And so you're getting comparisons to Roblox, but you're not there yet. And that's not good. This much money in. And you're even getting comparisons to Second Life, which is not good because Second Life, really didn't catch on. And it's almost, I try not to do it too much because it's lazy journalism to say, oh, this is just Second Life. But that's what a lot of people are thinking is we've sort of seen this before and we didn't jump in then. Why would we jump in now? And I think that's a legitimate question to ask. And I think investors are asking it as they pull their money out.
Well, and a lot of people have got to be asking, is Mark Zuckerberg, is he pursuing an obsession, even if he thinks it has a good business basis, and ruining this company? I mean, what's the future of Mark Zuckerberg? Can he survive long enough to make the metaverse work? I mean, I got a note from Grove. I thought it was interesting. He said a year or so back, Facebook traded at 300. Now, instead of cutting costs, the guy wants to increase spending. In a normal environment, the board would simply show him the door. They can, but too many powerful people are losing far too much money. And he says, he's asked, what will take Zuckerberg out? I mean, it's gotten to that point. And he says it's either going to be the criminal activities in politics or the SEC violations, or the board is finally going to have enough. But he's a dead man walking. That's Grove's phrase, dead man walking. And it made me think, how long can he continue to do this? You know, he built this company, he built it into $1 trillion company, but now it's a $250 billion company. And with not a lot of prospects right now, except this dream of his, does the board get rid of him, or do investors find some way to remove Mark Zuckerberg?
I don't know. I don't think there are many ways to remove him, and that's part of the problem. And I imagine the board is pretty much on board. But again, you know, one thing that we bring to this program is some experience in Silicon Valley. And there are cases where companies do survive something like this because on the other end, there's something people ultimately want. And you're right, everything is sped up now. And so the money that has gone into this metaverse is sped up, and the attention and the stock drop has all been sped up. But what if he comes out on the other end, doesn't have to spend hundreds of billions of dollars or millions of dollars more, and has a product for us to look into and criticize and look at it for its privacy concerns, but still has Instagram and still has WhatsApp and still has Facebook with its billions of users. There's a potential there. And when we've seen that, because we've seen, say, Roblox have success. Right. I just don't know because we haven't seen it yet. And again, stocks hate question marks. Investors hate cloudy futures. And that's still what Facebook has, or Meta has, going forward.
Well, I'll know he's got something when I hear you say, yeah, I covered the story yesterday, and wow, this is something. I've heard you do that many times. I'm not hearing that with this. There's no killer thing out there. And at some point, investors, the board, shareholders, they start thinking, why don't we just maintain what we had, the status quo ante, Facebook, WhatsApp, Instagram, turn this place into a cash cow. And, instead of doing this crazy speculative crap we're doing right now.
I mean, I don't know. These are all good questions, and all questions that have been asked for months and months. And I think part of the reason for the sudden drop in Meta stock after this earnings report is, after all these questions, people are just flat out impatient, and they're saying, show us the results. And Zuckerberg is admitting, we don't have the results.
Yeah. And
we won't have them for a little while. So, it's going to be a while, and that's just sort of how this goes.
Well, the bloom is certainly off the rose right now. We'll see. I hope, I hate to see companies get in trouble because it means a lot of people losing their livelihoods. So, I hope for the best, but it's going to take some time. I don't think we're going to be talking as much about Facebook in the next few months as we have been for the last couple of years. Okay. What a crazy week. I mean, next up, Google crashes. They have this reports the slowest revenue growth in 10 years. And their stock got completely hammered too. Wow. Revenue growth. It's up 6%, but that's the smallest increase. I mean, with Google, if you don't have a good increase in revenues and profits, then it's a problem. So this is the worst in 9 years, and their stock got hammered too. What's happening at Google?
I think with that one, it's just
TikTok hurting Google.
I don't know if it's streaming, but YouTube is off, and it really sort of comes into play with all the social media companies that are really struggling right now. Not so much with users, but look at Snap, look at Pinterest. Twitter's numbers. That's obviously a different story because of the Musk buyout, but all these companies and YouTube in them are now saying, hey, we're in a inflationary time. We may be heading into a recession. Advertising revenue is a big question mark. And they're saying that out loud in the earning reports after a 2-year period where we all communicated via social media. And I think the just takeout of social media companies this week and a little bit last week is I think partially coming out of the lockdown, but also just flat out worried about advertising rates. I think all media is being hit by this right now.
Yeah, well, advertisers obviously pulling back because of the fear of the economy. But is that enough to explain? Okay, Google's year-to-year revenue growth up 6%, last year up 41%. Operating margin is down from 32% last year to 25% this year, and net income is down 36% year to year. That's pretty extreme, especially for a fairly stable company like Google. Now, I understand YouTube. I personally understand YouTube, and I think everybody who saw the numbers on YouTube understand why. YouTube is not the YouTube we used to know. We used to go on there because we could listen to it or watch an entire song. And now that song's going to get, 2 ads breaking it up in the middle. That's just like having a DJ come on old AM radio and interrupt songs. It's like, this isn't what we asked for all these years. Google was an answer to our prayers. We get the videos, we get the music uninterrupted, but now it's more interrupted than almost any other source like Spotify. It's not fun anymore. Google is more of YouTube is almost a chore now. If you have to watch something, you have to sit through that 30, you can't even overcome the commercial. You got to sit through 30 seconds of it, at least one of them. That's worse than TV in many ways.
Well, look, you're not, in all due respect, the target audience for YouTube, and young people are still flocking there, by the tons. And yeah, the ad model for everything online has been awkward since there has been an online, and I don't have an answer for that. Google sort of solved it for a while with Google AdSense, and YouTube took advantage of that. But you're right, the pre-roll is just death for anybody of any age that wants to watch a video. But again, we're talking social media companies that are seeing their user numbers stay fairly strong, but it's the ability to monetize that's taking a hit. And I think that's what happens when companies cut back on advertising. And that's what we're seeing here with this economic slowdown and concerns because of inflation.
Well, so advertisers I'm not sure they're seeing their ROI on some of this advertising too. So, this is paradoxical. This presents a real problem to the streaming companies. If advertising cuts back and they have to throw in more advertising, they're going to start driving away audiences.
Right. I think it'll be less advertising because the companies are cutting back on that, and that is where they'll hit their bottom lines, and that's why we're seeing the stock prices fall in these companies.
But if what we see advertising cut back initially because the big advertisers stop advertising as much, but then the companies go out and sell more cheap advertising to try to make up for the lost ground, which means more advertising for us consumers. This vicious circle. This is going to be interesting. Okay, finally, as long as we're going doing all the bad news, Amazon. Here we are, except for Apple, all the big giants are on their knees right now. I'm not sure I've ever seen this in Valley history. We do have downturns and all the companies, have difficult times, but to see in 1 week, 3 of the largest companies in the history of the world suddenly get humbled, that's an amazing and almost terrifying sight. So Amazon stock some 13%. If there was one blue chip company in tech besides Apple, it was Amazon. And they fell below 1 trillion in value, stock collapsed 13%, and they missed all their analyst estimate for the quarter. What is that? What kind of harbinger is that?
I think for Amazon, it's the strong dollar. This is a company that is looking at some of the concerns of doing business everywhere. It's the everywhere, everything store, whatever it says. And as the dollar gets stronger, hey, if we're shopping overseas, that's great. If you're Amazon.com, it's pretty deadly. And so that is interesting. I don't know how long that lasts, but Amazon says it took something like a $900 million loss because because of the strong dollar. And so people are still shopping. It's almost, I mean, if you believe that stat, it's like, well, the more business they do around the world, the more they take a hit. And I'm not
So
smart enough
literally,
economically to.
arbitrage right now is more important to Amazon than actually selling stuff.
Well, but it's not, because again, we do this every week. People pontificate every day. This is a company that needs and wants to be around for the long term, and they will be. But it's an interesting time when you have such a strong dollar right now that if you're Amazon, you struggle in a way that someone, say, traveling overseas does not, And so I don't think this is a long-term problem for Amazon. I think their concerns are more, hey, Microsoft's getting into the cloud, and is that going to affect AWS or whatever? I mean, Amazon is just this behemoth that we all use so much. But it just had a 20-for-1 stock split. It's flapping around all over the place right now. But yeah, it's even threatened to go below $1 trillion in market cap, which for Amazon hasn't been there in a while. So it needs to come back. But look, it's a store. We're in inflationary times. People are cutting back. It's going to get hit. I think the big surprise earning of the week was Apple coming in at least as strong as it did, because again, it's a consumer company. It had its earnings last night. As you and I speak, the stock is up $10 after numbers that weren't that great, but that showed a resilience, even in inflationary times, that people are still willing to buy pretty darn expensive gadgets.
Is this a reassertion of, you've said this before, Apple is the only company there that makes things, makes physical objects. And so it's much more inherently stable than companies that are apps.
Yeah, but it's also the objects they make that give you a certain status. Yeah. There is a symbolism to owning an Apple product, as well as a functionality to owning an Apple product. And one has almost become as important to the other, if you ask me.
Isn't that interesting that after all these years, everybody owns something Apple right now? It still has that cachet of being special and conferring social advantage. You would think that the industry standard, the ubiquitous product, would be the thing that wouldn't give you status. And yet Apple still maintains that.
Yeah, I mean, the iPhone's longevity as a status symbol as well as a functional device has been pretty extraordinary. Other companies, Samsung, Google, et cetera, have tried to catch up. But it's that status. If you have an Apple product, whether it's now the EarPods or the iPhone, it says some things, and people appreciate that. They like that. They want that.
This is Steve Jobs' legacy, is that, it still lives on, because Tim Cook isn't bringing a lot of star power to Apple, and yet it's still got this penumbra of, we're Apple, we're special. You're join the march into history with us because we're cool. It's really an amazing thing. I mean, this should be somebody should do a Harvard Business Review study of this, comparing Meta and its fate with Apple and its incredible marketing and branding power.
Yeah, I mean, for a while they were kind of neck and neck, but now Meta's got.
You mentioned cloud. Cloud was the one part of all of this story at these companies, at Amazon and also at Google, that did well in the last quarter, which is interesting.
I mean, storage is storage. It's a commodity now. There's a lot of data out there. Remember in the .com crash, looking at 99 and 2000, companies that stored, say, government data, we didn't really call it cloud at the time all that much. They were the ones that hung in there because there was so much data to be stored, and it was still kind of a new field of, hey, wow, we can keep this somewhat secure. And now it's everywhere. Amazon has since taken over. Microsoft is in there. Google is in there. Obviously, you've got your other cloud-related companies, and even your smaller boxes and drop boxes and stuff like that. So I think it's such a big force, but it's not sexy, so you don't see a lot of stories about it.
Cloud.
Right, but I mean, Andy Jassy, who took over from Jeff Bezos at Amazon, was their cloud guy, like their AWS guy. So it makes sense. He's now the CEO, and as the company deals with all of this stuff with our economic, concerns, cloud is still going to be a cash cow for them, I think.
Okay, finally we get to, God, we're 20 minutes in. We're finally getting to what should have been the big story of the week, which is Elon Musk is done now. He's bought Twitter. He shows up at the headquarters carrying a sink. Let that sink in. I guess that was the message. Or he's going to fire everybody, everything but the kitchen sink. That was another notion. But there he is. He sent out a note to advertisers, which was, well, let's go first. He fired the executive team. They're gone. The employees, this is so indicative of Twitter employees. They came up with a list of demands. If you're about to be fired, you probably don't want to make a list of demands for your boss. But they wanted job security. They basically wanted the status quo ante, just with Elon Musk at the top. And if he didn't show up most days, that was even better for Twitter employees, according to their list of demands. Dumbest thing I've seen in a long time, but Elon looks like he's going to do everything he said he was going to do. And his note to advertiser was really interesting. Everybody thought, well, he's just blowing smoke about freedom of speech and the public square and saving civilization and all that. He's serious about that. And he told the advertisers that. I mean, a new order at Twitter, a fundamental change in the political conversation of the United States because of all this. What's he going to do, and how's he going to be? Is he going to be able to pull it off? He even admits he might fail, which I almost never see a CEO do.
Well, I mean, will it be a big change? Yes. Is it a new order? Yes. Will there be drastic changes? I don't know. Look, what can Musk do to make Twitter more attractive to advertisers? That's a big question. Yeah. Really, some of the brightest minds in the Bay Area have been working on that, and they've only been moderately successful. Right. And I'll tell you, Musk's openness to right-wing people, to the Donald Trumps of the world, that's not going to make Twitter easier for advertisers or easier for Twitter sales staff to sell to advertisers. Remember, Disney thought about buying Twitter and said, well, we can't because, hey, we love all the information, but there's this darker side of it.
Well, it's going to get a whole lot darker.
Right.
It's going to get a lot darker, right? I mean,
look, if Musk says, hey, I want all these people back on, and I'm going to make it free speech. Remember, free speech has taken on some different meanings lately. And it has started to mean you're going to hear a lot of hate speech on social media.
Yeah. Well,
advertisers are worried about that because that is limiting the audience. Look at some of the sites that are wide open, the Parlors and the Gabs and the Truth Socials. Their audiences are really small because people don't want to hang out there because they're going to see things that they don't like. And yeah, that's free and open. Good. I check those sites out a lot for my job, but I'm not going to hang out there. If Twitter becomes that, people won't want to hang out as much. And that's the death knell for a social media company. So yeah, Musk can say all he wants, hey, I'm valuing free speech. But a lot of bright people did that and had trouble selling ads. I don't know that Musk can turn that around.
Well, and this is going to be a chaotic period over the next few months as everybody, from every fringe corner of American life is going to try to test and see what the limits are.
Exactly. Because Musk has said, my limits are going to be different than what Twitter's limits were before. And that's got to put a chill down the spine of advertisers. Because, Musk has talked about, cancel culture this, cancel culture that, but it's not. Nobody's being canceled. People are being held to account for what they say and do. And advertisers are held.
You don't think the censorship bias kind of went one way more than another?
I mean, I don't, unless you think that people were, using hate speech more on one side than the other. That's what they got rid of. No one was out there saying, hey, I support something. Oh, you're gone. What was gone were people saying, hey, here's this person's license plate. He was dropping off a ballot.
Yeah.
It's fake. I mean, that's what was taken out, was really
Yeah,
hate, fake things.
but
anti-Semitic speech.
Twitter, I mean, there were examples of Twitter censoring people or deplatforming people for saying stuff that ended up turning, like about COVID, about different medications and all that, actually turned out to be true. That the preemptor, putting the, as I said years ago on this thing, on this podcast, that who guards the guardians? And we know that we do have evidence that the censors did come in with, or they had to, the inevitable as human beings, with certain biases. And the system that as it worked, we're letting 22-year-olds decide what was valid truth and what was just interesting speculation or a contrary view or something like that. I mean, if he just changed the censorship scheme at Twitter, he might be successful, but still you have to censor, because there's going to be child pornography, there's going to be violent stuff, there's going to be crazy fringe political stuff that's going to be pouring onto Twitter right now just to see what they can get away with. And I think he's going to have to do something.
Right. And, if those things are saying, I can do it myself, look out Twitter shareholders, or look out Tesla shareholders, because this is the guy who's going to be distracted. If he says, oh, I can do it and I can get rid of a whole lot of Twitter employees, again, who guards it? Is he making it less secure? So all these questions will eventually be answered, but it's going to take time. And, if there's one thing we know about Elon Musk, he has delivered before, but he's going to take more time than you think or than he claims. Yeah. And so
this is going to take up a lot of his bandwidth. There's no way around it. And as kind of a bad omen, Tesla just got kicked off the S&P 500. That he's juggling a lot of balls in the air. Tesla's kicked off the S. I saw the look on your face, but yeah, it was kicked off the S&P 500. How many balls can he juggle at the same time?
Right. I mean, if you're a Tesla shareholder, you're a little bit worried that he's so distracted by all these different companies and none more than Twitter. Okay, so you're talking about there's one index of the S&P 500 called the ESG index. I think that's the ironic one, because that's the environmental one.
Yeah. But he said, I
remember that. Right.
Yeah, that's a fraud. He basically, didn't he say that?
It's an environmental social governance thing, and Musk again getting his company into trouble. But I mean, here's a distracted person. There are just so many balls in the air, and I don't know how you keep juggling.
Well, and the thing about juggling is when you're juggling, you don't drop one.
Right. You're right.
You drop them all at the same time.
It's very good.
It just everything begins to go crazy. Is this sitting out in his future? I mean, we got Ahab at Meta, and now we've got Elon maybe taking on the impossible and thinking he can pull it off. This doesn't look good in the year in what's coming towards us.
That's going to be interesting for a while, and we'll certainly watch it.
Okay, Intel announced other minor stuff. Intel announced that it will offer foundry services. So what does that mean? Are they giving up on being, the once great leading company in chips, and now they're, we'll be a foundry. We'll be like a, Taiwan semiconductor manufacturing company.
Well, I think the headline from Intel's report is $10 billion in savings. They're likely to lay off a lot of people. Yeah. And that's what I'm waiting to see, is what number that ends up being. When you say you're going to cut $10 billion in costs, we know what that means. And they're disguising the language right now, but we know what it means. It means layoffs are coming. And so we don't know what the future is for that company, but we know that it's going to be leaner.
It's going to be ugly. They better build that super fab fast.
Sure.
Real quick, we're running out of time. Beyond all this, another story that would have been big: mortgage rates now top 7%. I'm seeing I'm not seeing very many homes for sale right now, probably because I don't think they can sell them at a good price. But those signs are starting to get dusty and gray. I mean, the houses are not moving the way they used to.
No, and they're not being put on the market. Think about it. If you're selling your house right now and you've been used to a 3% mortgage, and the next house you buy is going to be 7.5, you're even nervous about that, not to mention the person that might be buying your house.
Right.
And even as we saw prices in the Bay Area come down a little bit, if you do the math on an increased mortgage, you're really not saving money by buying a house. And by the way, your stock options just took a massive hit. It's a tough time out there for would-be Silicon Valley home buyers.
Oh, exactly. And then finally, as long as we're on the good news, the nation may run out of diesel the week before Thanksgiving. Now that seems like, okay, that's truckers. That could be disastrous in its own way. But interesting fact is, a lot of the generators that power our server farms when we have blackouts, which we're going to have, are powered by diesel. And we actually had a case. Someone told me a case of a farm down there, server farm in Santa Clara, that when they had the rolling blackout here in California in the Bay Area, it was off long enough that they ran out of diesel and had to go out and get more to keep the generator going, because they're like for 24 hours. Well, if we have a massive diesel shortage, that's a secondary impact that we're thinking about. Trucks stuck on interstates, not able to move. But what if all of our server farms go down as well?
Time to go green, Michael.
Yeah, just something to think about as the autumn leaves turn yellow and red. That's it for now, folks. You can find us on the Silicon Valley Business Journal homepage, as well as on Spotify, Anchor, Google Podcasts, Apple Podcasts, LinkedIn, and YouTube. I'm going to stop saying that. I think everybody knows by this point. Have a great weekend. Go walk in the fallen leaves. It's quite beautiful. And we'll see you next week. Bye-bye.